The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. And we've got an interesting day out here, a little bit for everybody. If you're a bull or a bear, if you're a bull, you say the bottom held. If you're a bear, you're saying, why isn't the market up 50 points with what we saw after the close of the bell last night? So to be determined, as they like to say, TDB, TBD, to be determined, TBD. I always look at that abbreviation and kind of scratch my head a little bit. But frankly, I'm happy. I've got some short positions on, and as far as I'm concerned, they looked good to me. But sometimes beauty is in the eye of the beholder. I think this is certainly one of those markets that gives a little bit to each side. But I think that there's some compelling evidence to say that we are going lower. And in fact, we'll talk about that in the probably fairly early in the Tom O'Brien show tonight. I think we'll do that outside this show. But get a little comments, hit the ball around a bit between Tom and I. But I think it's interesting. Got some very interesting results from tech companies' earnings, which I've been listening to. And we're going to talk about those in the Tech Insider hour. In the meantime, we're off 6.5 points. We got down to 2,000 on the S&P cash, 2.37 billion shares as we start the show. And, can we hang out here sideways for a few more days? I think the answer is certainly yes. We're probably going to see a little bounce. I think maybe 2025, 2030, maybe the high point of this next move, if I am correct. And if we see something like that little pop, maybe Monday, Tuesday, with some fun money coming in, that will be it. There is not a lot of fun money coming in. You can always check how much money is coming into the market via a company called Trim Tabs that actually looks at the flows, the fund flows. But so far, not a lot of cash the last few months, and I think that tells everybody a bunch. And we'll have to look at it a little bit more. As always, we like to start off the show with a little bit of histoire.
That it's all just a little bit of history repeating.
As we have the Super Bowl this weekend, the internet bubble nears its peak on this day in 2017.com. Companies each spend $73,000 per second for network television ads, a total of almost $38 million during the Super Bowl. By this time Super Bowl rolls around, at least 3 have gone into Chapter 11 in the next year, largely thanks to the money spent promoting themselves on Super Bowl XXXIV. That didn't make a lot of sense, does it? Those Roman numerals. And of course, everybody says we have Arabic numbers now, and the Arabic people actually stole them from the Hindus. I think we should give more credit to the Hindus for their numbers and quit calling them Arabic. But that's just me, because I guess the truth matters. But my guess is I don't have a lot of Hindus calling in and telling us why the Arabs shouldn't get credit for it. But that's just me. You can catch this news, as a lot of the news that I start off, or history, on Jason Zellwig's website, who's been a financial reporter for a long time, at jasonzellwig.com. If you're watching on Tiger TV, you can see his link down at the bottom, but I want to give him credit for putting together market histoire, and that is it. Does anybody really buy anything based on those ads? Good question in the den, and that is, the answer is somewhat. And more important than anything else is that if you advertise there, just about everybody's seen the ad. And there is a school of thought that if you have a product that has wide appeal, i.e., across the world, you're better off than trying to get a shotgun. You're better off with a rifle, trying to hit the target market of everybody right off the bat. And that's why so many of these products that you see on there are either cars or potato chips. You always have the Doritos commercial that everybody was advertising to .com people, investors. Probably not wise use of your cash, but if you're trying to get a mind share, as they say in Silicon Valley, the best way is to make sure that you're in front of everyone. And that's basically what the 2000.com bubble was about, is trying to get everybody involved in a giant bubble. But yeah, if you're Doritos, it's worth the money. If you are selling, I don't know, buggy whips, probably not a great application of your cash. If you're probably selling a Chevy, probably not a bad deal. If you're selling Budweiser, probably not a bad deal. If you're selling Lamborghinis, not a lot of people can own your car. So probably, if you're selling a $500,000 Lambo, probably better putting it in the Rob Report, my guess. But there it is. What else can you say? Anyway, we have the Super Blow. To tell you the truth, maybe I'll get into this. Well, I'll get into it now. I was kind of thinking, well, I never really watched the Super Bowl so much. I sometimes watch the Super Bowl halftime, but I'm even a little bit disgusted at this. We still have Katy Perry with the ick from that guy that she married before. It still gives me the shivers. It is one of those things where she was such a nice guy. Why she'd marry that heroin addict is beyond me. So we got that. And then, of course, we've got the guy that's coming on with her that I hate these guys that wear 14 scarves and think they're cool for it. And then he's going to sing a song where he craps all over America. If you ever read the lyrics to American Woman, basically written by a bunch of people hiding out from the war protest song, but mostly it's crapping on America. So I already know he's going to sing that. So, and I don't think he's that cool. I think people that wear a lot of scarves, they start off with one and then they get addicted. This guy, I'm trying to remember his name now. He's got like 14 scarves and thinks he's real cool. I'll think of his name probably during the break. But I think this has gone on to other people, like a actor that guy that's been in all the Pirates movies. He's gone off. He started off with one. Now he's 3 or 4, and he had the worst movie opening of all time. I think wearing a lot of scarves probably does not help you, and I don't think it really makes you cool. Although everybody thinks if they're a big artiste, they have to be. Maybe somebody in the den knows who I'm talking about. It's some kind of super spy guy ripoff that opened this weekend. But I saw it got 20% on Rotten Tomatoes. Yeah, Johnny Depp. Johnny Depp was pretty cool there for a while. Then he got into the scarves, and his box office openings have continued to go down and down and down. I think he only did like $3 million with this latest steamer that he released this week. Take off the scarves, Johnny Depp, and that'll be it. Anyway, that's pretty much for the news. It's been kind of quiet other than earnings. We're going to talk about a lot of earnings come in the Tom O'Brien hour, so I'll try to avoid that. We'll try to get back into maybe more technicals here for this day, but I do digress. But I wanted to get into Amazon and see how some of these stocks are reacting to news. AMZN, of course, huge news out here. Amazon actually decided to release their books, and we're going to get into that, like I said, in the Tom O'Brien hour. But basically what it did was come up here and close the door on this giant gap down where, what date was this on? I think that was on the 25th of June, and you had some huge volume down that day, which was about 17.8 million shares. You got about that on the way back up here. So maybe a bigger trading range between this 364 from July 24th. Maybe this thing just wants to go up and tag it. But the question has always been, how much money could they make? And we're going to get into it tonight. But at least they're acting like maybe they're going to respond. Everybody kind of had this stock set up for basically being a knob and telling all the investors to go pound salt. And Mr. Bezos actually showed some books. And as they say in the business, showed a little leg. And that's all that investors wanted to see. So that's kind of the interesting part out here, but up 13 to 14%. I actually did get Amazon Prime for Christmas, and it actually went and paid the $90. And there's a couple of reasons why. One, I was going to be ordering a bunch of stuff, so I thought I'm probably about $20 or $30 into shipping by doing that. And I had a lot of Christmas presents to buy this year, so it's probably not going to be a bad deal. I certainly don't use Amazon as much as Tom O'Brien does, but I think he's always got something. Every time I go into the office, there's 3 or 4 more boxes showing up from Amazon. So he's big on that. I'm not that big of a consumer. I pretty much buy all the stuff I need, and it takes a long time before I need something new. I tend to use it and not upgrade very often, except on computer stuff. Anyway, big move there. Another big beat out here is in the biotech sector. Biogen IDEC, certainly a nice breakout. This thing had been right up to these levels of the March 19th 360 area of 2014. It's been trying to get through there for a while. Did not show a lot of energy. Did not show a lot of leg. Certainly went into hot pants today, though, and is up much higher. And a solid breakout. One of the things I dislike about this chart, one of the things you need to watch very closely, is this huge volume down day of the, March 21st of 2014. Came down on almost 6 million shares. And the reason why is that if you could almost make a case that 6 million shares is what was being eaten up by this last 2 months of trading since early December when this thing gapped up. But I can also make a big case that this is a 3-gap play on the way back down. It has almost all the characteristics. That would take you back down to $250. So I wasn't expecting this thing to give it up like we did in some of the other stocks we've played in 3-gap plays. But keep a close eye on this. If everything turns south very quickly, you could have a 3-gap play on this. We'll be back in just a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rose, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risks, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Lenny Kravitz, that's who it is. He's pretty talented, but I think he's weighed down with all those scarves that he thinks make him cool. And I don't know. I think you can try too hard to be cool, and I think maybe he's jumped the shark on that deal. And of course, no doubt he's going to sing the Giant American Woman, the American Woman song, and crap all over America in America's biggest event. So I don't know. Maybe you could find a little bit more patriotic song. They're probably going to roll out a 200-yard by 1,000-yard flag and start screaming about American women. But if you listen to the lyrics, American woman, stay away from me. American woman, just let me be. I don't want you knocking on my door. Don't come back around here no more. It's kind of a horrible American song. And my guess is, since that's his only real hit, he's going to sing it, which would make me want to throw something at the TV once again. And I'm going to just avoid it. Cut out the horrible non-American songs or hateful American songs and get rid of those scarves and maybe count me in. But I don't think so. Anyway, live person. We're going to get back into some of the other big movers out here, but I wanted to, since I had this chart up already, there's some of these stocks that took off with big volume and are coming back at least to some level of support when we look at live person. You know, this thing took off with June 31st with 4 million shares of last year. Yeah, Guess Who? That's who originally sung it. But Lenny Kravitz is if he's singing, that's his only hit. So I'm assuming he redid it. So I'm assuming he's going to have to sing it. But yeah, originally the Guess Who. Who? Anyway, who's on first? Live person. Anyway, nice pop up here. And what can you say? 4 million shares up. Now, you did come into this with about 1.8 million shares on this huge candle down on the 15th of December. And so you had some volume kind of pick up out here. You don't want to see it. For the last 4 or 5 days out here, I got to say that the volume is not very extensive. And there are a few stocks out here like this. Green Mountain is another one out here that is coming back into its gap. Thing popped up and ran a lot of shorts out on, what is that, July 22nd with 10.7 million shares of on last year. Finally getting back into that gap today with 1.7 million shares. So some of these things look like they have come back. I'm going to have to talk to Andy Heck about the price of coffee and the price of tea in China. Why was always the cost of tea in China a big deal? I'll have to find out from Andy. Maybe he knows. But it is, what can you say? It is interesting. I'm going to say that there are a few stocks out here that aren't completely horrible. And those are at least a couple of them that came back in. Visa had earnings out last night. So did MasterCard this morning. Had some nice little bounces out here. But as far as I can tell, not a lot of juice in these, and actually gave up a little bit here today. Visa has this nice gap, and I have a feeling that most of these stocks are going to come back and fill them. I'd be worried that this thing comes back and fills that 220 area. So I'd much rather be a buyer at 220 on Visa than a buyer up here. Maybe watching that. Nice trading range, though. $40 on a $260 stock could be interesting. What is it? MC, what is MasterCard? MC. What is MasterCard? I know they came out this morning. Somebody in the den have MasterCard. I'll look it up here real quick. Want to look it up? Yeah, we'll get it after the break. What else do we have going on out here? Just a Trip. Another one of these things with that's coming back and starting to fill these long-term gaps. Trip Advisor. And it would be, ooh, we got something running. People in the den saying crude moving finally. What do we have out here? 2021 on the S&P cash, we're flat, 2.56 million shares. Anyway, look at TripAdvisor. This thing had a huge gap up on June 24th of 2013, and it's been trying to come back in and fill that gap for a while. 2.7 million shares came back into it with November 14th, $67.14. Came back into it on January 16th with 1.9 million shares, $66.04. What do we have out here today? What is it? And 900,000 shares. Not so bad. So there are a few out here that may be making some bottoms and long-term patterns. We'll look at a few more. MasterCard's MA. Thanks. We'll be back. We'll look at MasterCard when we come back. And a little treat.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And I need something to pick me up here for just a second.
I'll have to see my broker, find out what he can do, 'cause I'm in the market for you. There won't be any joker with margin, I'm all through, 'cause I want you outright, it's true. You're going up, up in my estimation. I want 1,000 shares of your caresses too. We'll count the hugs and kisses when dividends are due, 'cause I'm in the market for you.
Oh, yeah. If you weren't here the day I played that, that's just about the top of the crash. There were songs coming out in 1929 about I'm in the market for you, a love song about the stock market for his girlfriend. If there's a better indication of a top of a market would be if another song comes out like that anytime soon. I doubt if anybody would listen to it, though. Anyway, MasterCard came out. You have to look at MasterCard going up against the displaced moving average. It could not pop above it today, which still says that this is in a sell mode. It had a fairly decent indication of a long-term pattern I like called a double repo. And it hadn't been slaughtered yet, but certainly it is on a sell signal. Let's take a look at Visa real quick and see if it's the same. And yeah, kind of the same. It's above it. So yeah, probably looks like MasterCard, the weaker of these two in Visa. So we'll have to do it. To what else? Yeah, that's one of them. Let's see what else we got going on out here. Visa, P-Card, Green Mountain. Big drug in ICPT. This drug is, again, it's just getting this thing back up into its gap down. A lot of these things that did gap up are going right back into gaps that they had on the way down. This thing does not have the energy that it did on the gap down, which was on November 17th. This thing came down on huge volume of 4 million shares. It's up on 1.8 million shares. Now, what they do have is a breakthrough therapy designation from FDA for a liver fibrosis drug. And I'd have to dig into it a little bit farther, but a little doji out here. Boy, you'd want to really watch out for maybe a gap down on Monday on this, because you could certainly have a shooting star on this one, especially going against that volume on the 7th. So I wouldn't be chasing this one, but this is the kind of one that is at least a dangerous pattern until Monday to see whether you've got anything backing this back up. Another stock of interest out here to me is the web.com group, www. Did I do 4 W's? Which is kind of interesting. This thing had a huge gap down, filled the gap, come back down to the lows. And this is where the risk reward gets a little bit better. But yesterday it did break the November 6th low, closed back above it. There was 5.9 million shares on that November 6th low at $14.71. Went to, of course, $14.52 yesterday and is closing back above it. Now, this thing did not have enough energy come out of it in the last leg down to make me think this is going to be a V bottom out here. But there are some, like I said, some stocks out here that are showing some signs that maybe they've come back. We talked about Live Person already, didn't we? So let's talk about Gulfmark. Gulfmark is another stock. Again, the volume on this downside did start to slow down, but the energy was about the same. What I really like, though, is just the very, very light volume the last couple of days. In this one, GLF, the December 16th low, $19.49, 1.2 million shares. Last couple of days, what'd you have? 600,000 shares, 385,000 shares. Today, 315,000 shares, going up against 1.2 million shares. Not a bad day. In fact, actually, you could even call it a million shares. So 30% less. Normally, you get kind of a little 1 or 2 day bounce out of that light of volume. I don't normally play those, but you can see that the energy was about the same on the last leg down. So you get a bounce and it comes down with really light volume the next time. Maybe you can see a bottom in Gulfmark Offshore just under the $20 level, but nothing to buy here so far. We talked about this. One of the strangest companies out here in that it is a crane company and also had walk-in freezers like you find at big restaurants and stuff. And everybody kept asking them why they had both businesses. My answer was that they kind of liked the fact that if one wasn't doing well, the other one would. But a lot of investors said that people wanted pure play. They either wanted cranes or they wanted the refrigerator business, and they didn't want both, so they weren't buying the shares of the company. So the idea thing is to split the thing apart, and that's what's got this going on. I don't know exactly when the split's going to happen, but this will split this one in. Am I thinking the right company here? Just make sure. Oh, no, this is the solutions provider. I've got that one all wrong. Let's get this one right. Profile. Okay. Let's go back to the headlines here. trying to remember what the stock was last night that had the crane in the refrigerator business. Made head of Wall Street. Beats Q4, guided up, I guess is all it needed. This is actually a little different than I was thinking. The other one maybe, oh yeah, MTW, thanks, see. This is a little different. This is actually broke back through. I dislike the fact that it never went back and tested the October 16th low, but Manpower, nice pop back up against the September 5th high that had 900,000 shares with 2.4 million shares. Just need to hold this high. And, well, probably your next stop would be $80 on this if it can continue. MTW was the one I was thinking about. Yeah, this thing's not moving so much. I thought this was why the other one out here. Actually, he's down a little. Huh. I figured this would have, everybody's been bugging them forever to split apart. MTW's Manitowoc company has cranes and walk-in freezers. And it's beyond me. I guess they also do like morgue freezers and stuff. Anytime you need a big freezer, Manitowoc is your thing. But, you know, this thing is not, it still needs to come down and test $16.24 to buy it. Have 4.8 million shares out there, and probably a little too much volume. January 16th also, so maybe back down at $16. Probably a bad business now in the cranes, as no one wants to get into that business. So yeah, I digress. What else do we have? MTX. Get to that one. MTX. Minerals Technology. Nice little popper out here today. Nice price spread. Probably would have liked to seen a little bit more volume today, and you would have liked to seen about 800,000 shares by the close. It doesn't look like it's going to get to it or into this big, nice candle from the 19th of December, but probably still not too bad. Decent earnings out here, earnings of $1.22 on Minerals Technology, including non-recurring items, 15 cents better than the estimates. Revenues rose 100% year over year, 516 million versus 526 million consensus. So a little light on revenues, but good on profits. Has entered into an agreement with Glencore for South Africa. So not too bad out there. Of course, the stinker du jour today is the Deckers, and no one likes the Uggs. I feel like I should be doing a Seinfeld thing. Uggs? They got to be doing Uggs now at Deckers because no one likes it. Maybe it's been the light winter, maybe it's been the fake snow that they didn't get this week. But looks to me like there is some problems in Deckers. And, of course, you had this giant gap that was probably going to get filled anyway. These monster gaps seem to always get filled. On the 25th of November, 2013, this thing gapped up almost 8 million shares. This was a perennial push for a number of quarters by Kramer on TV. Got a lot of retail investors in it. What you can really see is this thing had its real big volume move from May 7th, 2014 up to the high on September 22nd, 2014. Came all the way back down to $80 on October 24th. Came up. The energy was a little bit light. Volume was about the same at the highs. So no real clear loss. It came down on very light volume, had a nice ABC, started it, and then blew apart on the way. In fact, it just about pretty much completed an ABC down before earnings. And basically what they're saying is just no one's buying the Uggs. Maybe they got enough Uggs. Maybe Uggs last a long time. Or maybe they're just out of fashion. But no Uggs. Just Uggs by the executive staff because they're not selling enough Uggs. Anyway, what else do we have out here? CBI. Weakness attributed to Georgia Power updating a forecast for completion of its plant. So this is a utility on the downside, which you don't see a great deal of, but it's coming. It's been going down for a while. So apparently, more than a few people have known it. This thing was $89 April 4th of 2014 for a utility. Chicago Bridge and Iron Company makes a lot of this stuff. Just doesn't sound like any of this stuff's doing any good. Yeah, it's going to miss some in-service dates, not complete the plant it's working on in the Vogel plant units 3 and 4. Probably where I'll park my 787 Dreamliner. Anyway, this thing, just blowing apart out here for one of these things, but it's done nothing but go down. I don't know why anything else would seem to matter out here. See if we have anything else out here that is very interesting. Let's take another quick spot out here. Well, we're down 5 points on the S&P cash out here, so it's almost. I remember when my buddies we used to go to the computer convention in Las Vegas. We'd play Elevate or Keno, depending on where everybody stopped in the hotel, and it was full. So theoretically, everybody should be getting off on every floor, but. I think you could almost do it with the S&P here today. This thing continues to bounce around fairly strongly. But that's it. And, some of these stocks that should have just ripped out after the bell last night should have a lot of people scratching their heads. And interesting enough. And, what else can you say? To see if we have anything else out here. Did I have tests? Let's take a look at tests from yesterday. A few of these stocks I wanted to get back to that I did not have a chance to. Noodles and Company. This is a fairly recent IPO that pretty much got decimated down to $17.15 on September 10th. This one's kind of interesting in that I have a scan for stocks that literally do nothing. I call them the Lazarus scan, and that is, they come back from the dead. But if you get 10 or 15 days of nothing going on, you really want to start watching the stock, because that is either a lot of distribution or a lot of accumulation. NDLS is this noodle retailer, restaurant retailer. And let's see when they come out with the earnings date. You would think that doing nothing is something. Now they come out the 24th. So keep an eye on this thing. If this thing starts moving up, they may have either have a huge problem and or a huge win coming. But normally what it is either someone has a bid right under the price or they have one right over the price. And that this is down on lighter volume today. Would be very interesting to see how this thing does on Monday. But there are a few stocks like I have that are showing up. Stock that I really have always loved, actually the company I love, the stock, not so much. It shook me out on the way up, was Ubiquity Networks. They make Wi-Fi boxes that go in businesses and houses. Not looking too bad, other than the fact that it's gone through its December 1st low that had 2 million shares with 1 million shares, and hasn't closed back above that December 1st high of $26.98, but it could be interesting. Anyway, give me a call, 877-927-6648, 877-927-6648, as we get ready for the Tom O'Brien Show starting shortly.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 70 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
There will be a giant sucking sound.
Yes, there will, and that's going to be the second month that we close down lower, both now January and, well, I guess just January so far, but a lower close this month. It looks like we're down 10 points on the S&P cash, 2.8 billion shares, pretty good volume for a Friday. We're just really starting to get back for the next couple of months where we're going to have basically everybody back at work and out of snowdrifts and everything else. And 2.8 billion shares, pretty good. If we get about 3.5 billion shares for the day, I'm going to say it's a pretty good Friday. I think we'll continue to chop out here until probably, what is going to be, what do we have? Monday, Tuesday, probably fund buying last into Tuesday. So by Wednesday, we should have all the cash from that fund buying is going to come in. If we don't have some significant moves back up by that point, I think you probably have to reevaluate the bull case if you are thinking that way, because it doesn't get any better than when all the cash comes in from those IRAs. It just doesn't. And if your friend is the correlation feature in Excel, just go back and put all the stuff in there and look at the last couple of days of the month and the first couple of days of the trading month and see what kind of numbers you come up with. I will tell you that they are significant, statistically significant, and that will be it. So what else will you have going on out here? Take a quick look at someone I haven't looked at MSFT today. Kind of like it. Wrote a little bit about it. I like the company, and I like what they're doing. I have a feeling that, I don't know if we're going to talk about it tonight. I don't think so. So I'll bring up a little bit. For a lot of people, they don't remember the problems that Apple had in the financial community from about 87 to 89 and why Steve Jobs was kicked out. They were debating on whether or not to do what Microsoft did, which was, of course, really decide to just license the software, which had huge profit margins, and forget about the hardware, which had lower profit margins. Intel basically making the lion's share of every computer sale for hardware, and Microsoft making it all for the software. But basically, Apple doing both sides of it. There was a giant debate on whether or not they should split up the software, but I kind of like the idea, the long term of Microsoft. I wrote about it in the Tech Insider today. But generally, the market will punish you even for doing the right thing. Doesn't matter how bad it is in the short term, but I'm thinking you probably, I wrote about it today, I think that there's probably some good long-term changes that they are making. The problem is it's going to be a year from now before they come out. But maybe we'll talk about that tonight in the Tech Insider with Tom O'Brien. I see him getting ready in the bullpen already. We'll be over there at about, for maybe the first segment. Depends on how fast I can get out the door here. If not, we'll be in there at 4:20 Eastern time. But what do we got? We're down 12 points now on the S&P cash. Volume's good, though. Microsoft, of course, kind of coming back down here. It's busted through all those lows from August 6th last year and October 15th. He had that huge gap down. I think that this is probably just the beginning. Let's take a quick look at Intel. Intel also doing some interesting things here shortly. It's looks like it's coming down for this gap at $33. So you've got that. We're going to be talking tech in the second hour of the Tom O'Brien Show. In the meantime, sell when you can, not when you have to. And we'll see you Monday, same bat channel, same bat time for the Power Trading Hour with me, your host.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.